Today, I'll be going through how to read and what to look for in a fund fact sheet. Let's get started. Cha-ching! What's up everyone? Welcome back to another video with the Millennial Finance. Most investors invest in ETFs and mutual funds. In recent times especially, they have been one of the most popular investment vehicles, and we 100% support that. In a video that we did at the end of last year, I did mention that DIY investing is tough, and for most people, investing through ETFs and mutual funds are actually the way to go. Popular ones are ETFs like the S&P 500, the Nasdaq, and then there's mutual funds like Public Mutual. Even if you invest in Robo-Advisors like Stashaway, Wahid Invest, or MyTheo, you are technically investing in ETFs because that is what those Robo-Advisors hold. But have you actually thought to yourself, how much do I actually know about the funds that I'm invested in? What are the holdings and principles of the fund? Is it even in line with our investing strategies? One way to find out, or in fact the best way to find out, is by going through the fund fact sheet. Fund fact sheets are essentially an overview of the fund that we're investing in, which includes things like its objective, its risk levels, its costs, its past performance, and its top holdings. It's everything in a glance, which makes things much easier for us investors. If I'm not mistaken, every single ETF and mutual fund out there in the market has a fund fact sheet for retail investors to go through, and honestly, if they don't have one, I wouldn't really put my money there. After all, like I always say, it is our hard-earned money that we are investing in. I'm not going to invest with a fund manager who's not even going to tell me how they're investing that money. So today, I'll be going through how to read and what to look for in a fund fact sheet. I'll be sharing my screen and we'll just go through some examples together. We'll actually go through 3 different fund fact sheets so that you guys know what I look for. So the first one that I'll be going through is the ARK Innovation ETF, which is the flagship fund for ARK Invest. So you can see here, this is the website, and as I said, the fact sheet is very easy to find. So you have to click this here and immediately we see what is the fact sheet of this company, of this fund. So ARK gives investors a lot of information. You can see here that they tell you why invest in ARK, exposure to innovation, growth potential, tool for diversification. I don't know if it's really diverse, but yeah, these are just reasons or sort of their marketing to potential investors. Now let's get through what we really are looking for in a fund fact sheet. So the first thing that we want to look for is this thing right here, the fund objective. And we want to know if what they are doing is in line with our investing goals. So you can see here, ARK mentions that it is an ETF that seeks long-term growth of capital. When they say long-term growth of capital, usually what they mean is that it is a high-risk investment, or rather high volatility. So in this case, right off the bat, if you're saving for something like a house or a car and you anticipate needing this money in the next 6 months to 1 year, then this fund is probably not for you. Down here, when we go lower down, it also says that they invest in both domestic, which is the US, and foreign equities of companies that are relevant to ARK's investment theme of disruptive innovation. So very clearly, they say that they invest in companies who are going to innovate and they're going to disrupt the industry when they do so. So that's pretty much the fund objective. Most fund fact sheets have this. The next thing that we want to look for is the fund details. So they tell you here, I think one of the most important things to look out for is the expense ratio. There may be different names for this, management fees or whatnot, but at the end of the day, this is what is being charged to investors on an annual basis. This is not something that you have to pay out of pocket. It will be deducted from your investment returns automatically. AUM is also something cool that you want to look out for. So $19.4 billion. What this tells us is that people trust this fund manager, people trust ARK, that they're willing to put over $19 billion in this ETF. Number of holdings as well, 35 to 55. Then average market cap, median market cap. Those are sort of extras that ARK provides that not many other fund managers do. So going back to the expense ratio, I would say a standard would be under 1%. Passively managed funds should be lower. It should be around 0.2% for things like the S&P 500. But because ARK is actively managed, it is higher at 0.75%. If a fund has a management fee or an expense ratio higher than 1% a year, I usually would stay away unless they have some very compelling reason to invest my money there. Moving on to the fund's performance, you can see here they even have a chart, growth of $10,000 since inception in January 2015, and they compare it to the S&P 500, which is a good benchmark. So you can see here, ARK has definitely outperformed the S&P 500. Looking into more details, the fund performance here, this is all on an annualized basis. So you can see here, ARK market price over the last 5 years has returned an annualized basis of nearly 40%, compared to the S&P 500 of 17% and the MSCI World Index of 13.75%. So this clearly shows that ARK has outperformed the market over the last 5 years, 3 years, whereas the last 1 year has been a bit dodgy for them. So this is good for us just to give us an idea of how they have been performing in the past. But I want to remind all of you that just because they did well in the past doesn't mean that they will do well in the future. So don't use this as the only basis for investing in this fund. Make sure that you do other research on top of this. So the next thing that you'll probably see in most fund fact sheets is the top 10 holdings. What you want to do here is basically scroll through these companies and see if it's in line with your investment strategies. So just quickly going Tesla, Teladoc, Roku, Coinbase, Square, Spotify, Shopify. These are all great companies and I would invest in them in my individual portfolios anyway. So for me, this is a pass, but again, it's an individual thing, so up to you guys. Another thing that you want to take a look at is the weightage. So they have a 10.2% allocation to Tesla, which is very high for an ETF, but that is what made ARK famous anyway. Cathie Wood was super confident in Tesla and it paid off. And the top 10 holdings represents 51% of the portfolio. That is kinda high. If you are someone who wants more diversity in your ETFs, then this is probably not for you because 10 stocks represent 50% of your investment. For me, I'm okay with this, so I'll go ahead and invest in ARK Innovation, or in fact, actually I already have. So other than looking at the top 10 holdings, this is just 10 companies out of 90, right? What else we want to look for is the sector and geographic allocation. So you can see here, sector breakdown, not much surprise, the leading one is information technology, but the second highest one is healthcare. So what you want to look for here is, again, are these the sectors that you want to invest in? For me, the answer is yes. And are they too heavily weighted towards one sector? Probably the answer is yes, but I don't really mind it because technology is a sector that I am very confident in. Next up, geographic breakdown. Again, same thing. Do you want diversity or not? In this case, ARK has nearly everything in North America, and to me, that's fine. One cool thing that ARK did is they actually broke down technology because technology is very vast. There are many different things in technology. So they broke it down by cloud computing, digital media, e-commerce. Don't expect other fund fact sheets to have this, but this is something ARK came up with and it's pretty cool. Before we go on to the next fund, if you want to invest in ARK's ETF or any other ETF worldwide, then sign up for Interactive Brokers. You can use our link. We'll leave it down in the description below. All right, so that is it for ARK's fund fact sheet. Not much else. It is actually that simple, but just to make sure you guys understand, I'll be going through 2 more fun fact sheets. The first one being this Affin Hwang Select Asia Pacific excluding Japan Balanced Fund. So this is on Fund Supermart. Again, very easy to find fun fact sheet. Just click on it and this will pop up. So of course, there are some differences in how they present it versus ARK, but the core of it should be the same. You should still be looking for the same things. So quickly, let's see what the objective of this fund is. It's a balanced fund. As per the name, it provides growth and income opportunities through a diversified portfolio containing a mixture of equities and fixed income in the Asia Pacific excluding Japan region. So this is important. You see, unlike ARK, which is 100% equities, this one is, I would assume, 50% equities, 50% fixed income, which is stuff like bonds, money market funds. So one important thing that ARK didn't have is this thing called a benchmark. A benchmark is basically Affin Hwang telling you that this fund, what we are comparing ourselves against is this benchmark. And in this case, it's 50% MSCI All Country Asia Pacific excluding Japan and 50% of RAM Quant Shop MGS All Index. I don't know what this is. I assume it's some fixed income sort of ETF. So this is what they're benchmarking against. It is important to note. I'll explain later. So again, we can go through the fund details. You can see here, initial sales charge 5.5%. That is really high. That's the problem with mutual funds I don't really like. Annual management fee, again, 1.85%. That is pretty high. So these are things that you want to look out for. For me personally, this is a bit too much and I won't invest my money here. Okay, so now let's look at the fund performance and you'll understand why the benchmark is important. So you can see here, SAPBF is this fund by Affin Hwang. And the one in gray is a benchmark. And you can see right from the start in December 2014 until now, this mutual fund has underperformed its benchmark, which is of course a bad sign. When you look at the annualized return here of the fund, 3 years, 6.8%, 5 years, 4.5%, it is okay. I mean, it's not great, but it's acceptable. but I still wouldn't want to invest because it's so far behind its benchmark. What we want to look for is a fund that it's, at least on the same level as its benchmark or outperforming it. In terms of asset allocation, again, same thing. They don't mention what is the split between bonds and equities, which is a bit weird, but they do tell you, what kind of bonds they invest in. So Yinson, Aeon Credit, Lafarge, these looks like they're all Malaysian companies. And then equities, their top holdings are Taiwan Semiconductor, Amazon, China Mengniu, AIA. So you can see that this is a lot more diverse in terms of country already. Then you can take a look at their sector allocation. Same thing as ARK. All these things you can go through. The blue one is equity, the orange one is fixed income. And then they also tell you the credit profile of the corporate bonds that they've invested in. Most of them should be at least BBB and above, which is the case. So these things with bonds inside, the name of the bonds, the credit profile, it only applies for mutual funds that invest in fixed income instruments. If you're investing in a mutual fund that's 100% equities, of course, they won't have any information about the bonds. So yeah, that is Affin Hwang's mutual fund. And the final one that I will go through is actually something that a lot of you guys invest in, which is Wahid Investors' HLAL ETF, which is a USA Shariah compliant ETF. So again, you can see here, ETF fact sheet, boom. You can see it right from the website. Anyone can access it. So I'm just going through this and it's a bit weird because they don't have a fund objective, but that's fine, I guess. Let's go through the details. So HLAL, domicile United States, expense ratio. Again, this is a management fee, 0.5%. So you can see that this is much lower than both ARK and the Affin Hwang mutual fund, which is a good sign to us, of course. So let's look at their top 10 holdings. Apple, Tesla, Johnson & Johnson, Pfizer. These are all great companies, but I want to point out something that I don't really like about this ETF, which I have mentioned before in a Wahid review video, and that is the fact that Apple has an 18% weight in the entire portfolio. So remember when we were going through the ARK one here, and I said that, Tesla's 10% is kind of high, Apple at 18% is incredibly high for an ETF. I mean, Wahid has been, I don't know, lucky or what in a way that Apple has been doing well. But when I invest in an ETF, I don't want one stock being such a large portion of it. If I wanted that, I may as well just invest in Apple directly. But again, this is individual preference. This is just what I think. Some of you may be okay with it, so you can go ahead and invest in this ETF. So again, similar to ARK, the top 10 constituents contribute 40% of the entire portfolio. You can see here they have 224 different stocks, which means that the other 214 stocks probably have very small weightage in this ETF. However, when you look at the returns of this HLAL ETF, it has been super. Right, over the last 1 year, 9 months, 6 months, since inception, it has beaten the S&P 500 and the MSCI World Islamic indexes by quite a good amount. So Wahid fund managers, if you guys are watching this, again, good job. Then you scroll down, again, you see the same thing, sector breakdown, and they tell you, automobile and parts. Biggest allocation should be technology. No surprise here, and then healthcare. So a lot of the funds that I look at, or a lot of the popular funds are actually very similar. Technology will usually be the biggest, and then healthcare will also be pretty up there. But again, these are just samples of diversified funds that I'm going through today. There are a lot of ETFs that are very specific, right? Like semiconductor ETFs, cloud computing ETFs. All of those, if you want to invest in, I would still recommend going through the fund fact sheet just to see what they're investing the money in. So with that, I hope you guys are much clearer on how to read a fund fact sheet and what to look for. I would say that this is a key skill to have, even though you want passive investments, because when we invest our money, like I said, we don't want to just blindly trust people and just put money there. We want to know what we're actually investing in. Even when I was choosing a fund for my investment-linked insurance, I was insisting to my insurance agent that I look at the fund fact sheet because she was just telling me, just invest in this fund because it's been performing well. That's not how I work. I want to see the fund fact sheets and I want to decide what mutual funds I'm going to be investing my money in. If you guys want to invest in ETFs like ARK or any others over the world, then sign up for Interactive Brokers. You can use our link. We'll leave it down in the description below. It really helps the channel and we appreciate it. Thanks for watching till the end, guys. Give us a big thumbs up and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.